Week 3 of Aon's Public Affairs podcast was recorded April 23rd, 2020.
Hi, everybody. Welcome to week 3 of the Public Affairs podcast. Daniel Sirota here, part of the Public Affairs group in Chicago. Welcome. I hope everybody is being safe out there. I am gracious to being able to have my good friend from D.C., Joel Wood, Senior Vice President of Government Affairs. Joel, welcome to the podcast.
Daniel, it's great to be with you. Thanks so much for inviting me.
Hey, Joel, so, I wanted to kick this off. Your boots on the ground going on in D.C., maybe in your home, but still want to be able to talk about it. What's going on in Washington? And if you can kind of add a little flavor about what the industry as the broker community is doing into the conversation, that would be great as well.
It's funny, just you and I in February were together in Washington reflecting on what a puny little agenda that we had this year, having knocked out the Cadillac tax, TRIA, flood insurance, several other things in December. And pretty much the only thing we were thinking that was going to go through was maybe on the benefit side, surprise medical billing, and maybe we would get some weed legalization on banking. And that all seems so quaint now. I view our efforts since the pandemic was declared in essentially 3 tranches. The first tranche was that effort by many members of Congress, not many, a couple dozen. And then we've seen wildfires in 7 states so far attempting to retroactively impose business interruption coverage, notwithstanding any viral contagion exclusions or other exclusions. And I feel relatively good. I think there's been a lot of a reputational hit on that front, but I feel relatively good that that's not going to take place. The second stage has been ongoing, where we're trying to work with the remainder of the property casualty industry at the 5 major property casualty trade associations, together with, much more importantly than us, the policyholder community, led by organizations like the International Council of Shopping Centers, the National Retail Federation, National Restaurant Association, to come up with a broader-based recovery fund. We are finding that there are a lot of holes in the CARES Act. A lot of your clients are winners and a lot of your clients are not winners. And there are sympathetic people who are not getting money, and there are unsympathetic businesses that are getting money. And we're seeing that. And we need a broader-based federal facility. That's phase 4. That's very uncertain. Republican leaders not sure that they're even ready to go there, having already almost spent $3 trillion. And the third tranche, Daniel, is the prospective pandemic risk insurance response. Is there a role for the mechanisms of the insurance industry to be utilized going forward? And if so, what does that look like?
Yeah, and the timing there, I think, is an important part, Joel. I mean, we're currently still in this pandemic. How do we then think about the aftermath, maybe when this is done or in the future, but continue to have the conversations with all sides and all parties? Because I think everyone needs to come together.
No firm has the assets that Aon has to help us on that and imagining what it is. And I'm already appreciative to several on your staff to help us craft our responses on that. But you're right. It took Congress 14 months after 9/11 for the Terrorism Risk Insurance Act to be enacted. And obviously, any prospective pandemic response that utilizes existing insurance mechanisms is going to be one that anticipates beyond COVID. And certainly we are a long way away from that.
Yeah. And Joel, I think you brought it up in the second tranche of your response there, bad stories, higher premium prices, what problems do we see for the industry going into Washington 2020 and beyond? Because I think there's a lot of bad stuff going out there on our industry, prices, raising of prices, the next phase of this. How do we get out of this? And how do we then, figure out the future of what's to come in DC policy?
Just as I was about to go to sleep last night, boom, up came another story of extremely sympathetic restaurateur. And heck, I even play around in the restaurant business. I own a restaurant that's impacted by this, against the insurance industry that are unwilling to pay their claims for which they've been paying premiums for decades. Yes, I mean, that reputational hit is there, and it's going to continue. I'm not sure that there's any crisis communications professional on earth that can ever make our industry more sympathetic, given that reality of most pandemic risks not being covered. But I will also say this. It seems to me that this is much like the way that people perceive Congress, which is uniformly negative, versus the way that people perceive their congressman or congresswoman. I've not seen any flight significantly. We only have 200 member firms. You guys are right up there at the top. But all of our member firms are large and sophisticated, and I think the lesson learned in all of this is transparency. Aon are leaders in this, and I think when I see announcements like this, the announcement this week that Greg Case pledged all 50,000 Aon employees, this is evidence of the kind of company and the kinds of best practices and engagement with clients that I think is hopefully going to emerge stronger from this. But, having been a lobbyist now for the Council of Insurance Agents and Brokers for 27 years, I've lived through the Spitzer Inquisition. That was very personal for Aon. I've lived through 9/11, obviously deeply personal for Aon. Lived through the financial distress and even things like the wind versus water disputes in Hurricane Katrina. This is certainly on a whole different level, but I have great confidence that the industry is going to emerge strong.
Yeah, and I think there's a lot of those examples you provided. I think little bits and pieces are, things that we can use for best practices, thinking about how to be able to get through this crisis. And I think that's a great point. Going into kind of how to get past this next phase, we have to use those examples to being able to figure out what worked, what didn't, and how can we then, work together as a cohesive unit here.
Hindsight is 20/20, Daniel, but I think that collectively, and maybe our association played a little role in this, maybe collectively, the first response was a little harsh insofar as pandemic risks are not included in business interruption because of direct physical damage, because of viral contagion, and because of the way the industry interprets civil authority. And when in reality, every policy has distinctions, especially on the very sophisticated manuscripted policies that Aon is executing on at the highest levels. The four walls of those policies are being deeply examined, and we've already seen some insurers have taken charges. Travelers took an $85 million hit in the first quarter based on the small fraction of their claims that they do believe were impacted. And forgive the dog.
Never a dull moment in your house, Joel, that's for sure.
Did you see there's already been a workers' compensation case that's in the system where a guy working from home tripped over his dog and filed a comp claim?
Yeah, it's interesting times we definitely live in being at home. Joel, you talked a little bit about the three tranches. There was a lot of conversations coming out of this week. They're passing what they're calling phase 3.5. The House is going to vote on it today, Thursday, at some point at the end of the day. When we're thinking about down the road, we have a sense of kind of what 3.5 is looking, $450 billion, money going to the PPP program. What are some of your biggest priorities you see your trade really going into this next phase of whatever it may be? We've known that Mitch McConnell brought up earlier this week, we're going to be very focused on being money concerned to a point where we're piling on a lot of debt. But, where do you see the opportunity that you guys can engage, and also, your biggest priorities moving forward?
Thanks. It was the late, great Senator Everett Dirksen of Illinois who said a billion here, a billion there. Sooner or later, before long, you're talking about real money. Well, now it's a trillion here, a trillion there. On the one hand, I came up with a Reagan Revolution conservative Republican congressman from Tennessee in 1983. And so I'm very sympathetic to Mitch McConnell. I also recognize that we had a $22 trillion GDP economy last year. And so that notion that we take 4 or 5 trillion ultimately, given a crisis of this kind of existential magnitude for so many American businesses, doesn't seem too far-flung, though I'm very sympathetic to the notion of we need to digest between the 2.3 trillion that the Fed is doing easing through lending facilities, plus the 2.2 trillion of the CARES Act, the new 468 billion, I think it was, in CARES 3.5. Nonetheless, there's a $50 billion a day burn rate on applications that are coming in for the PPP program itself. We're already seeing some inequities in that. You're seeing, a lot of $10 million payouts to firms that maybe you can't justify in the same way that some mom and pop USA, Main Street, that might not be getting their relief yet. So what we envision in stage 4 is a federal facility that is modeled after the Victims Compensation Act of 9/11, obviously written massively larger. And it would be a facility wherein there would be a special administrator within the Treasury Department, and they could contract with private entities, presumably many within the insurance industry, on the brokerage side, on the loss adjuster side, on the carrier side, and work through business continuity plans utilizing that mechanism. Whether this is going to get traction or not, or whether we're just going to have another round of building on the CARES Act, it's too early to say right now. Leader McConnell has said that they're going to come back no sooner sooner than May 4th. I think that that's probably right, but activity is certainly changing on a daily basis.
And for advice that are listening on the line, how can people get engaged? Where do you see the best avenue to make the biggest voice, for folks moving forward?
Well, self-servingly, they should look first to you and your team. And I think, it's been a little frustrating in that working with the policyholder community, we're not quite ready yet to launch. We need to have a firmer sensation of who our champions are going to be on Capitol Hill, whether this is going to have legs with the leadership on a bipartisan basis in both chambers. And the policyholder community is going to dictate when we are going to hit send on a massive grassroots approach. And I know that'll be communicated through your team, and you guys will assess how deeply you want to be involved in that. But I would urge everyone within AON to look to you for leadership on this. My dog's ready to go, as you can tell. And also AON pays a lot of money to be a member of the Council of Insurance Agents and Brokers. Our website is www.ciabboy.com. Please go on to it, sign up for our daily newsletters. I'm certainly going to be adding the item about Mr. Case's proclamation today to our daily newsletter. And we're just trying to curate as much good information. All of our inboxes are exploding, and we're going from one Zoom call to another. But hopefully that'll be helpful information to you, and we will treasure again our working relationship, and desperately are going to need the sophisticated expertise of people who know the business like nobody else in helping us move forward.
Well, yeah, and couldn't agree more, Joel. Working together with you has been a pleasure. This is our Super Bowl in the world of public affairs, and this is something that we need to be and want to be a resource to clients and our colleagues internally moving forward to make sure, one, our voice is heard, and two, that we're coming up with solutions to help with the problem here and really take our business to be a support factor for our clients, our carrier partners, our reinsurers, you name it. Well, Joel, look, thanks for coming on to the podcast today. Very much appreciate it. Glad you didn't bring up my toe.
I was going to bring up your broken big toe.
Hey, during quarantine, it is what it is. With a 3 and a 1-year-old, keeping busy.
So grateful for the partnership. And I hope that everyone in the AON family is staying safe and healthy, and for all of your families, all the best.
Well, and thank you, Joel. And thank you all for joining the podcast today. Next week, week 4, we're going to be joined by AON's compliance team to really get into the weeds in a lot of the state regulatory guidelines, as well as what it means for you. We want to make sure folks have a better understanding of what this means, what states are talking about, and we will tune into next week to be able to learn more. To stay up to date with what's going on with AON around this coronavirus pandemic, please visit aon.com/coronavirus for more info. The podcast will be stored here week to week, and we look forward to keeping everyone posted and engaged.
This information is a resource for AON clients and business partners. It is intended to provide general guidance on potential exposures, and it is not intended to provide medical advice or address medical concerns or specific circumstances. Due to the dynamic nature of infectious diseases, AON cannot be held liable for the guidance provided. We encourage visitors to seek additional safety and medical information from credible sources. Thank you.